What's up? How we doing, boys? AMD new all-time high. New all-time high. Look back at the old videos, mother sucker. Okay? Anyways, what's up, boys? I'm back in the supercar, as you all know. Listen, the portfolio is eating good right now. It's eating good, but it's not eating good enough. All right? It's not. So a couple updates. I'm trying to get the hell out of JD.com. I think that was a mistake. I bought it at 34. It's at 31.50 now. I've been selling covered calls against it, and I'm collecting the dividend. The dividend's kind of fat. It's like fat. I think it's new. I think they just added it. But I underestimated how bad the price wars were in China. Like, JD is a very great company. It's undervalued. Has a ton of cash, but the competition is so fierce that these companies now, they're not making any money because they're competing with all these other companies, and there's so much competition, and it's driving the prices down to almost zero, and it's causing, these companies, these giant companies, to be able to make zero profit. And also China's GDP is not growing really anymore. There's a lot of downsides. So I'm going to look to exit around 35 if I can. So I've been selling covered calls with my shares to try to slowly reduce my average price, and I want to get out around 35. So if it tanks back down to 20 or 15 bucks, I'm okay holding it because the dividend would make the stock really attractive. It wouldn't be a growth play. So either way, it's a win-win. So that's my latest portfolio update. I am looking for a house pretty seriously at this point. So I'm trying to put 20% down without taking anything out of the market, which it looks like I'm going to be able to do, which is awesome. So I'm excited about that. I do not want to pay private mortgage insurance. I want to do whatever I can to not pay PMI. If PMI wasn't a thing, I would put down 3%. But since PMI is a thing, a tax on, not rich people, PMI, that's what that is, tax on poor people and normal people, then I would have put down 3%, but since I have to pay PMI, if I put down less than 20, then I'm just putting down 20. Hey, what's up? So yeah, that being said though, I'm not super worried about that whole situation. I'm more worried about how every house is going for 10 to 20 to 30% over asking price in my area. It's really bad, guys, over here. This is not going to be necessarily just about the stock market. It's going to be about the housing market too, but I'll talk about housing right now. I'll get back into stocks later. So I'm 28. Played my cards incredibly right. I am probably in the top 0.01% of 2020s, people in their 20s, in terms of net worth, income, everything. And I'm barely able to afford a house. Barely. I can, but it's close. So we're looking at, housing right now. Mortgage is better than renting in every market. I don't care where you live. I mean, I just don't. I'm sorry. These people act like, on paper, if you're a bachelor or a bachelorette, then okay, renting is fine. But once you have a wife, a boyfriend, a husband, a kids, don't rent, man. God forbid something happens to you. God forbid, it's not worth the risk. Like, it's the stability for not only yourself but your kids and spouse to know that no matter what, you have a place to live in, and you can't get kicked out, and they can't get sold from underneath you. Like, there's a lot of value in that mentally. I think I'm very against the whole rent and then invest the difference, even though on paper it looks better after 30 years. There's so many other variables outside of just it being on paper that you need to consider, okay? And you know me, guys, I'm a min-maxer financially. I'm a financial min-maxer, and I will get the most out of my dollar, and I'm still saying that I think buying is a better choice, even if monthly it's more expensive, even when factoring in the opportunity cost of the down payment, and even after I hit a fucking pole right here. I'm merging onto a fucking busy road here, so hold your horses. I'm going in. Hold your horses, I'm going in. Oh yeah, here we go. Ah! Okay. Alright, we're good. That was a joke, guys. I wasn't actually crashing. That being said, the housing market is cooked, okay? And this is the problem that people like to undershoot with themselves. What they think is, okay, I'll rent for 5 to 10 years, I'll invest the difference, and then I'll buy a house, right? here's the problem. Let's say you do that. Let's say you do invest the difference and you are buying a house in 10 years. Well, yes, the stock market typically outperforms housing by a large margin, so you should be able to afford a house, but people forget taxes, okay? Taxes are a big thing, guys. Even if the stock market does outperform, you have to sell your stock and you realize a lot of capital gains, pay those capital gains, and then you're buying a house at a much higher price. So it almost turns out to be a wash when you factor in tax. And it's like, you know, back in the day, I think early 20s, guys, mid 20s, like I think buying a house is not the smartest thing, especially if you don't have kids. And look at me, right? I've not bought a house, right? Until now, my late 20s, because I didn't need that stability, and I didn't really care. I didn't care about that. Like, oh, I want to have, you know, a place to live no matter what. I want a fixed payment. I don't want my payment to increase every year. But again, there's so many other factors, and I have no regrets. I mean, my biggest regret is not buying a house. It's not investing more money. Like, people like to think, oh, the housing market went up so much the past 10 years. I should have bought when I was 18 or 20. It's like, guys, you're missing the point. It's not about the housing market. It's about asset accumulation. Like, the fact that it's housing, like, all right, whatever. Like, not having a house sucks, yeah. But not having ownership in good companies is even worse, because that outperforms a housing cost by so much. But one of the big things people like to forget about is, like, not forget about, one thing I'm nervous about is I'm nervous, kind of pivoting to the next thing. So let me end my housing comment. So my mortgage is probably going to be about $3,500 to $4,000 a month, and that's with $20,000 or 20% down. So the house is probably going to be between $500,000 to $700,000. It's going to be a 3 to 4 bedroom, 2 bath, very normal house. The house, they cost around $600,000-700,000 here for that type of house. It's where I live. It's very competitive. If the house is listed for $500,000, it's going to sell for $625,000, and so on. So I just want to make that clear. Like, this housing market where I live is probably one of the worst in the country. It has not crashed. House prices are up 11% year over year. It's bad, okay? It's real fucking bad. The only market that's somewhat comparable is New Jersey, near the city. But if I can buy a house, so can fucking you, okay? In this market, it is fucked, okay? Renting a house is $5,000 a month for a 3-bedroom house. It's fucked. It is fucked. Giga fucked, okay? Not like in a funny way. Like, no, it is fucking giga fucked, okay? So, and I can't control what the housing market's going to do. I can't control any of that. I can't control what the Federal Reserve's going to do. What I can promise you, though, is if I wait, houses are going to get exponentially more expensive over the next 10 years. The stock market's going to be exponentially higher in the next 20, 30 years. And I need to diversify. I've been in 100% equities my entire life. And now that I'm almost 30, I really want to make sure I have a slice of the real estate world. I want to be able to have a house that I could rent out if I wanted to move out. I'm looking for a house that has an apartment in it so I can rent out the apartment and the main house and not have to sell it to move into the next house. I want to build up a little bit of a house hack portfolio, you know, while I'm there. And I want to see how that goes, because I do think having a little bit of real estate in terms of a diversified portfolio is good. I don't think diversifying into bonds is smart. I don't think diversifying into like weird shit is smart. But I think the hallmark of millionaires and billionaires in this country is owning companies, and it's owning real estate. So, you know, again, yeah, the $100,000, the $150K I need to put down on the house. If there was a really good opportunity in the market, I probably would buy it and then I would rent, but I don't see it right now. So I'm just going to buy a house. And then, you know, honestly, guys, if rates do come down, prices probably will go up. And if they don't go up, then they'll go down a little bit, but they're not going to go down a lot. I don't think that's ever going to happen again. So I'm not going to wait around for a crash that might never happen. And here's the best part, guys. If I buy a house and rates go down, I'll refinance. I'll take all that fucking money out of the house. I'll take my 20% out, right? Because I'm sure the house prices, even if they go down 5%, I'll still be able to pull out most of my down payment, and I could just put that in the market, and I could refinance. And my payment will probably be less, and I'll have all my down payment back. So you're not necessarily buying a house. You're really moving your money from one asset to another, right? You're just moving it into a house, and that is going to generate you 3% a year in terms of inflation growth, right? With home price growth, appreciation. But yeah, guys, end of the day, like, if you're not in a serious relationship, if you don't have kids, I would be okay with renting. I'd be okay with investing the difference. But when you have a serious relationship, when you have kids, I think you have to throw that math kind of out a little bit. I think you have to be a bit more flexible. I think people undershoot the value of not being able to get kicked out of your house. Guys, especially the guys listening, because I think most of you guys are guys. Listen, if you have a wife or a girlfriend or whatever, and you move in together, the amount of sentimental attachment that woman will have on the place you live is insane, okay? Like, and if you don't let her build that, and then that gets taken from her because the landlord wants to sell, or your rent goes up too much and you have to move, like, not having that control as a man is not good. I don't think the girl would like that, and also, but I don't think that, not only that, well, I think she wouldn't like it, I also think that, like, a little bit of resentment could build in the relationship there, where, like, if she's really happy in this house, like, think about it, right? Like, us guys, we don't necessarily care that much. We kind of just we'll buy something because it's worth something, and, like, we're that type. But a woman's much more emotional and sentimental, and they're much more, like, locked in with, like, what really matters. Like, men, we're like cogs in the machine. We get work till we die, and we just fucking kind of, it's kind of depressing. But a woman is much more emotionally adept, emotionally, like, in tune with everything. And I don't know, I mean, maybe I'm a little crazy, but I've seen it happen all my life, man, where, like, you decorate this place, you raise your kids there, maybe you have your cats there, and then you get kicked out, and then it becomes like, oh, I miss my house. Every year that passes, I miss our old house, and it becomes into, like, a nagging thing, and then it could literally destroy a relationship. And, like, that is not, you can't put a financial money on that, right? And also, you can't put financial, like, you can't put this into a calculator too, like, the peace of mind of just, like, knowing that your payment is going to be around $3,000. Maybe your property taxes go up a little bit, but that's going to stay the same or close to the same. And you have control over an asset. You have leverage now. Like, buying a house cash is the stupidest fucking thing you could do. I say buy it with the least amount of money you can down possible. But regardless of that, like, guys, I don't know how else to explain it, but there's so much value in owning a house outside of a financial calculator. Like, you just have to use your brain, okay? Use your brain a little bit. Think about it. You're controlling an asset that's worth $600,000 with as little as 20 grand, okay? So when that $600,000 asset eventually goes up to $800,000, your 20K has appreciated to 220K in 10 years. That is a 10X, right? In 10 years, which you do not get in the stock market, right? So you have to remember that your cash on cash return in real estate is always going to be better than the stock market because of leverage, okay? And leverage on a house is not like leverage in the stock market. You can't get liquidated, right? Like, there's obviously ways you could lose your house, you miss your payments, you get foreclosed on, right? But at the end of the day, 9 times out of 10, you're going to be okay if you take out a lot of leverage on a home. You are. I mean, again, yes, there could be some black swan crash event, but I mean, it's your single family home, bro. Make the fucking payments. Don't be a bum. Get a second job if you have to. Like, I'm sorry. If you lose your house and you can work and you're able to work and you're healthy, you're a bitch. You a bitch, okay? I don't care. All right? If you got some issue going on, I totally get it. Disability, health issues, you get laid off, get another job. That's a bullshit excuse. You get fired, get another job. You can't make the payments because of bullshit spending. You're a loser. You can't, like, there's stuff. And I bet most people that lose their houses and tell you not to over leverage yourself are the people that would, they'd say, I can't make the payment this month. I'm just not going to make it. It's like, dude, that is so irresponsible. Like, don't be an idiot. So I guess the moral of the story is, guys, you can always make more money, but I'm trying to keep my mortgage at 25% of my gross income. I mean, it's still high to me looking at a mortgage and saying, holy shit, it's 25% of my gross income, which is probably closer to 35% of my take home, which is crazy. And, but that's the market we're in, and that's just how it's going to be. And I'm confident in myself to be able to make more money, and I'm confident that rates are going to go down eventually. And I think that will put me in a good spot to refinance. But if they don't go down, I'm still very healthy. I'm very able. I'm very, capable of making more money. I can easily boot the shroom up again. Hey, no, but seriously. Anyways, guys, it's a long video, but I just kind of wanted to nail that home. So I'm seriously looking for a house. I'm definitely going to start streaming again when I get my own place. That's going to be fun. I'm excited. And might house hack out the apartment. We'll see how that goes. Maybe a basement apartment, maybe a ADU on the side, like an accessory dwelling unit, like the garage converted into an apartment, something like that. And then see what happens. But we're putting out some really aggressive over-ask offers on homes, so I'll keep you guys posted. But in terms of the stock market, I'm not doing auto buys anymore. My S&P auto buys, I paused everything. I think we're really overextended right now in terms of index funds. I'm still looking at Celsius and ELF to make, allocate more funds. I think that ELF and Celsius are my two biggest watch list items. Hood I bought it I was in the Discord, guys. If you saw it, $68. I literally got the bottom. I screenshotted when I bought it, and it's up almost 50% since I bought it, which is fucking insane. I'm thinking about getting out of it already because everything just seems it went up way too quick, way too fast. And I don't know. I think the oil shock hasn't really hit the economy yet. I think everyone seems too positive. And I want it to crash. So I'm a bit biased. Like, I really want the market to just crash 50%. Like, I'm waiting for that day, dude. One big flush out and, I'm set for life. You know what I mean? I just really want a big flush. And the fact that I want it makes it dangerous because, confirmation bias. And I'm thinking, oh, it's coming, just wait. So what I do is I take my notes on the TradingView chart and I chart out every time the S&P crashes. I write a little note on what I did. And I bought a lot of stocks a couple weeks ago when the VIX was 35 and the S&P crashed 15%, whatever it was, 10, 15, 20%. I bought a lot of stocks and I'm happy I did. I bought a lot of Microsoft. I bought ServiceNow. I bought the VOOG index in my retirement account. But I thought we were going to go lower, to be honest. I really, really thought we were going to go lower. And it seems like maybe we aren't. Maybe that was the bottom. And if it was, I'm very well positioned in a very aggressive portfolio. But if we did crash, I'd probably put the entire housing fucking fund into the market. And then I would just put 3% down and pay the PMI, to be honest. If there was that good of a deal, I would do that. But, right now I think AMD's, it's not expensive at all for 2028 earnings and stuff like that. But would I buy it right now? No. I really would like AMD, to think it went up that much so quickly. It would have to see some crazy numbers out of AMD to make me want to buy more shares. But I have so much AMD already. I think 25% of my portfolio is in AMD right now, which is disgusting. Tesla, I have so much fucking Tesla. Dude, I haven't bought Tesla in 4 years. And I have so much. I bought it $100, $120 a share. And I thought about selling it when it got to $580 or whatever the fuck it was, $480. But then I thought to myself, okay, 10, 20 years from now, Tesla's going to be worth so much. So I'm so optimistic on Tesla in the 20-year time horizon. I'm so optimistic. But in terms of buys right now, guys, I would say I would look at ELF. I would look at Celsius, Estee Lauder. I really wish I got into Bloom Energy, but I wanted it at 100. It only got to 120. Robinhood is a little overextended. So yeah, my two watch list buys, Celsius, ELF, and then honestly Whirlpool, the company that makes washer dryers. I bought 50 shares at $52 a share. I got a good price, but I bought a really small position. They pay a really good dividend. And I think as interest rates come down, the housing market starts to heat up. I think appliances, kitchen appliances, the mixers, the washer dryers, the blenders, all that shit, the KitchenAids, I think all that stuff's there's going to be a lot of demand for those things as housing increases. So yeah, I don't know. I'm going to go to the gym. So I will catch you guys later. Hope you enjoyed this longer video, and just hit me up on Discord if you have any questions in the private chat, or if you don't have roles to the private chat, just let me know, and I'll roll you up. All right. I will catch you guys later. Wired headphones. Got to protect the brain, guys, with the Bluetooth. All right. I don't know. Maybe I'm schizo, but all I know is the Bluetooth headphones do not do me any favors. Okay. Maybe there isn't any long-term study. Well, there isn't any long-term studies, but maybe there isn't any significant evidence right now that it causes issues in humans. But what I can say is it's definitely not healthy to have Bluetooth going into your brain. Okay, I think we can all agree that even if it's marginally unhealthy, it's probably not good for you. Okay, especially if this is no long-term studies. All right, bye.